Okay, welcome back. You got the market, which is going to open up in about 12 minutes. The pre-open, that is. Let's just have the GIFT Nifty rates on our screens. That's suggestive of a higher start, 27 odd point higher start for the index. Well, so it's perhaps going to be a slow start. The tailwinds are there. Global markets last night were up 0.75%, both Nasdaq and S&P. So the handoff has been good. Anuj is here in the studios as always with what he's watching out for. Anuj, good morning.
Morning, Prashant. I'll start with a couple of charts if they're ready. Let's start with the FI long positioning chart. We had, spoken about it some time back. Now let's revisit. This is where the market had peaked out. This is where the market had bottomed out. And this is the FI peak long position, FI peak short position. We are back to almost peak long positions. But you know what, this chart still does not worry me as much because we're still at 70% long. At the bottom, we were 90% short. So we can get there. Absolutely nothing wrong in that. For the near-term traders, what I'm watching out for is the options data. And in that, if you look at the Nifty options first, now this is the Nifty call options. And what you will see here is the call and put options, 19,500 and 19,600 puts. They have the highest open interest. So that's obviously your big support. Now, this is the Burj Khalifa that we need to cross, basically, 19,800 call. We could not do it yesterday. That's where the resistance is. Similar data for the Bank Nifty would come up now. And over there, you will see the support and resistance. Look at that. This is the 45,500 call. This is where you have the highest open interest. And, of course, at 46,000. So those are obviously your resistance markers. The texture, though, is one step back, three step forward. That's been the market's texture. Some resistance at 19,800, but my sense is that 19,800, 20,000, there could be some consolidation and the market will again break out. It's so overstretched. If you look at the moving averages, the current 5-day moving average is 19,612 and 10-day moving average is 19,466. So the best case scenario for the market would be if these moving averages catch up. And the way of doing that would be if the market consolidates and maybe corrects to 19,600 and the moving averages move up. And one last point, why our market stands out, just look at the numbers. Yesterday, for example, from IndusInd Bank and Polycab. Polycab in particular, of course, came in market hours. But just tell you that, why this market is rallying and this feeling that you get about this market being in the same parallel like 2003 to 2007, when consumption and finance both did really well. I think we're going through something similar as far as the medium to long-term texture is concerned.
Okay, well, Anuj, thanks a lot for that. So not too far away from that 20,000 milestone.